We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up GBP, JPY. We are on the 12-month time frame. Price action last candle to the right-hand side is a bearish red candle small, consolidating with the second to last candle in the market. We do have price action overall, lower lows, price action overall, higher highs. Adding the midpoint, also adding second level lows. Third level lows and fourth level lows. Current price is sitting at 157.192. So if price works its way up, it can tag that resistance line at 165.472. Before tagging the area, it can tag that midpoint right in the middle at 161.608. If price action breaks out of resistance line as 165, it can head up to the next following level, which will be at 220.738. And before tagging that area, it can tag that midpoint at 192.680. If price drops down, it can tag that support line at 121.258. And before tagging that, it can tag that midpoint at 140.776. So let's draw back out. Let's take a look at what's happening in the market. So GBP, JPY started off at a high, came down to a low. Look like a pattern's trying to form in this area here. So the main area we're paying attention to is we see that the market started off at the high, broke, retest, pushed down to the midpoint, retest, and we had a few retests at second level lows, and then the market retested overall lowest low of structure. So this is the area we're paying attention to, what happened at the bottom of overall lower lows. So if that market push up from this area, we can see that pattern right in front of us for that coming down in red. First leg, second leg, third leg. Market's trying to push up for that fourth leg. So we're looking for the market to close out for that fourth leg formation to retest, to push up further. So far, market only made it up to fourth level lows. So we're waiting for this market to, because it's currently consolidating with price in second. So we're looking for that market to break, retest, to push up further, or just follow with the bullish green candle, work its way up to close out for that W formation. If market drops down, it's just creating new levels. So finding the levels, we have the market is identifying the break, retest, break, retest, break, retest. And if it pushes down, it's retesting the bottom as support to push down. Coming from that pattern, as we can see, it can be identified as a double top, first, second, third, fourth. And we see the first, second, third. Market drops down for a double retest. Working our way to the 6-month time frame. Price action on the 6-month time frame is reading as a bullish green candle spike down to low inside the second last candle, inside third last candle in the market. Also inside the bottom of that fourth last candle markets, was creating that consolidation. We are looking for price to engulf that second or third last candle to the upside or downside to push that market in that direction. Second last candle has identified as a spike down to a low, so it's a retest for that overall pattern, as we can see for that first, second, third, fourth retest, market pushed up. If it's rejected at the resistance, it's coming from a new pattern, which will either close the M structure for that first, second, third. Market drops down and creates that double top, double top, breaks, retest, then push down further. Working our way to the 3-month time frame. Price action 3-month time frame is identifying as a bearish red candle, spike down to a low. Second and third last candle, spike up to the high, spike up to the low, which is when you see something like this, it's just identified as an overall consolidation. So we are waiting for a price to break out of the second to last candle wick or the third to last candle wick to push that market up in this direction. Excuse me. Working our way to a monthly time frame. Price action monthly time frame reading as a bearish red candle spike down to the low. So the way we break this down is we have the resistance, we have the mid, and we have that support. Okay, market spiked up to that high, created that first, second, third, fourth, trying to come down from a double top overall. So is that market looking for that break retest to push down further for that double top and retest on the monthly time frame, or is it going to be respected at this midpoint, identify the break, the retest, which are identified as a first, second, third, fourth retest? Market pushes up from the type of triple bottom, a double bottom, and retest. Working our way to the weekly time frame. Price action weekly time frame reading as a bearish red candle spike down to the low, tagging that area of support, could be reversing to work its way back up. Price action candle push down to a low, look just like the push up to the high of second last candle. So we have another area of consolidation. We want to see that market breaks out the top side or the bottom side of that area. If so, if this market is respected for that spike down with current price, we can see that formation spike down to a low, first, second, third, and market pushes up. Now, if it drops down, it's coming from the double top or maybe the triple top that's being read in this area. So we have a first, second, third, fourth. So we have a double top and we have a double retest, or left shoulder, double right shoulder, and the head market drop down through that midpoint and tag that support. Is it going to respect and work its way back up, or will we be receiving the break and for that market to push down further? Headed down to the daily time frame reading as a bearish red bullish green candle spike up to the high. Doesn't really mean anything because it's within inside the second last candle, so it's creating that, it's once again is in consolidation, and we're looking for that breakout of that second last candle. So we're going to see that market bounce up and down to that patterns form, so we can see that market identify the break, the retest, break. If it's going to retest, it can push down further, but so far we just having sideways pattern consolidation. Working our way down to the 4. So now we're on the 4. We're going to find our midpoint of that area at an SR line and see what's going on. So price is we have a midpoint at this area between the resistance line. We're going to put a zone on that area. Let's see what's happening. So what's happening is that market is identifying, if we draw a midpoint within this area here, that separates the bottom of that zone to that resistance line. Market broke, came back to return, pushed down. We're looking for the market to do what? Come back to return, to push down further. But price can also just tag, and I'll zoom in and take a look at this. Price can also just tag that midpoint within this area and be enough for that market to identify a break, a midpoint retest, and that market drops into that zone. Working our way to the 3-hour time frame. So 3-hour time frame reading as a bullish green candle. So that structure is trying to form on top of that zone. So we do have that first, second, third, and market's trying to push up. This is already the closeout of the W formation, so the W has been created. Now we're just looking for a break and retest or a doji, identify that market's going to push up. If it doesn't break above this area here, that wick, that market's coming back down. So think about this area being a type of SR line right in the middle, or a zone. Okay guys, this is Cam Jones, FX, GBP, JPY.